How on earth did Katie Price avoid, or I try to use the word evade, £147,000 worth of tax that the HMRC can no longer claim? How did she do it? Well, check out the details on this video. Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in this video we're going to be talking about Katie Price and how she was able to dodge £174,000 in the HMRC tax. Now, this is an interesting slide. I appreciate this is the Sun. I'm not going to talk about that particular paper, what your impressions are of it, etc. Let's just move that aside. But what I want to do is focus on really how Katie Price was able to dodge this 174,000 as it says there. Just going to read, and what we're going to do is go into details about what we can learn and what we should do and what potentially we should not do. Okay, so that's the whole idea behind this video. And it just says here that she went into insolvency. The company that she owned, Jordan Trading Ltd, went bust, owing hundreds of thousands of pounds, and we'll talk about that as well shortly. Going to voluntary liquidation. Total assets now is 3.2 million. As she goes through, there's a couple of things it says here. According to the liquidator's most recent report filed at Companies House, which we'll go through again, that Katie Price owed 192,376, 25 to trade expenses, etc. And then she also had a direct loan account outstanding, which would also incur a tax charge of 32.5%. So it's not just the values that we're talking about here. There potentially is more tax to pay. But because she's going into liquidation, the taxman is likely to receive just 15,755 in tax. Now, what really happened here? Well, she just filed for bankruptcy. That's as simple as that. If we go into the accounts, we can see Jordan Trading Limited. This is dated the 30th of April 2015, where this is all kicked off from. Now, you might think, well, it's old one. What am I going to learn here? But this is the account. And you'll notice in 2014, there's a big profit and loss, but then a massive loss in 2015. We can't see what happened there, but there was some substantial losses being made in there. And there's the debtors of 274,000. This intangible assets, figuratively speaking, intangibles means absolutely nothing at all. And you've got then the creditors due 335,217. Now, amazingly, these accounts weren't even prepared to show the debtors and the creditors, so we don't actually know what's going on here, apart from the fact that the accounts are pretty weak, I would say. And then we've got this insolvency letter that basically says, right, got liquidators coming in, and away we go. The problem this approach is the fact that once you get the insolvency in, the liability stays with the limited company, not with the individual. So the fact that you've got this debt owed to HMRC matters not. It is just another creditor, and therefore back to this point of, if you go through insolvency, they are accredited just like anyone else, and they have to try and put some attachments to the money that's left over. The biggest people that will make money is not the individual owning the limited company. It will be the insolvency practitioner. And amazingly, their insolvency practitioner was quite substantial in terms of fee. In fact, in total, Moorfields claimed that 56,553 liquidator costs, which fundamentally is most of the money that's going to be available left in the company anyway, leaving very, very little for anyone else. So the limited company closes down, and Katie Price pretty much gets away from paying tax. Can she set this company up? Well, she may not be able to be a director again, but someone else could be a company director and she could be a shareholder. And this could repeat. What can we learn from this exercise? Well, you could set up companies and close them down and not pay your creditors, but you need to be able to sleep at night. I couldn't do it, but there are people out there that will open a company, trade it like mad, extract the money out as quickly as possible from the limited company, and then close it down. So is it possible? Yes. Is it ethical? No, I would say. But that's exactly how Katie Price, as the Sun has mentioned here, £174,000 tax bill as a company shut down and amid bankruptcy, which is now long and gone. And she could just set this company up again, which she is by selling, again, pictures of herself. And she's able to carry on as though nothing happened. So take it as you might. Is it right? Is it wrong? Put in your comments box below this, please. That would be fantastic if you could do that. Until next video, my name is indeed Simon Misiewicz from Optimised Accountants. Hopefully that video was useful for you, but please do not stop there. There are plenty of videos that I know that will help you build your wealth whilst reducing your tax liability. And in this video, well, this is the one I think you should be watching right now.